Hello, my name is Dr. Larisa Yarovaya, and I'm program leader of the BSc Finance program at the Southampton Business School and the University of Southampton. So welcome to the test lecture for the BSc Finance, which will give you some idea how our lectures and seminars are going on in Southampton University and specifically at the Southampton Business School. So today we'll talk about the financial effects of the COVID-19 pandemic. But first of all, let me quickly introduce myself. So I'm working as a lecturer in finance at the Southampton Business School. I'm also program director for BSc Finance and deputy head of the Center for Digital Finance. So in terms of the research, I published several peer-reviewed publications in finance, and specifically I'm focusing on the topics like contagion, financial technologies, and international portfolio diversification. I'm also a chair of the Cryptocurrency Research Conference in 2018, 2019, and 2020. So I'm also serving currently as associate editor in different academic journals. And in Southampton Business School, I'm teaching two modules, Monk 1026 Foundation, so Finance to the first year students, and Monk 2004 Portfolio Theory and Financial Markets to the second year undergraduate students. So we always start our session in the Southampton Business School from explaining the learning outcomes of the session. So what students can learn after attending the session. So our today's topics is financial effects of the COVID-19 pandemic, and the learning outcomes of the session are on this slide. So at the end of the session, you will be able to understand the impact of the COVID-19 on financial markets. You will be able to explain three unique characteristics of the COVID-19 crisis, and you will be able to discuss the financial effects of the COVID-19 pandemic using main financial theories. So what is COVID-19 pandemic? The COVID-19 pandemic has been compared often with the Great Depression in the 1930s in the US, and the financial effects have been also compared with the global financial crisis of 2007-2009. So Professor Harvey called this crisis the Great Compression, while some journalists and experts also compare the COVID-19 crisis with different global wars. So COVID-19 can be considered a black swan event, a situation that has never previously occurred and which caused existing risk management models to fail to adequately evaluate the risk. So if you heard the term black swan event in relation to the COVID-19 pandemic, you can also argue, but well, there were some other pandemics and epidemics in past. Why COVID-19 is so unique? Yeah, and today we will talk about it. So Sharif et al. 2020 also argued that the COVID-19 crisis falls in the category of pandemics and generates a different type of contagion to both the global financial crisis and to wars. And the first activity today, and again, I want to explain you that normally in Southampton Business School, we will have a mixture of different activities. So we'll be practicing the active learning approach. So we'll be encouraging our students to do something during the lecture, not only listening us, not only making notes, but also occasionally we insert in different active learning activities. And the first activity today that I would like to offer you is to go to the website Our World in Data and to find the country from where you're from and to consider the statistics of the spread of the COVID-19 crisis and for example, to observe the amount of total COVID-19 confirmed cases. As you can see from this graph, it started from basically the spread spread of the crisis, the active spread and transmission of the crisis started from roughly from March 2020. Yeah, you can see the first spike in cases and the confirmed cases, and you can see that United States has a huge number of confirmed cases, as well as United Kingdom, Germany, Canada, India, Japan. So please find your country following this link and try to observe the dynamics of COVID-19 confirmed cases in your country. So what are the unique characteristics of the COVID-19 crisis? So the first unique characteristic that it is possible to timestamp the crisis and identify its main catalyst. So the first spike of the coronavirus has been detected in China, in Wuhan City, Hubei province, on 31st of December 2019, and we can use a clear timeline of virus spread across regions and countries, and also we can keep a record of any relevant government responses to the pandemic. It was not possible to do it for the global financial crisis, where we cannot identify the precise beginning and the end of the crisis. And similar for East Asian crisis, it was also quite challenging to timestamp this crisis and to find this detailed periodic. However, with COVID-19, we have this strong catalyst of the pandemic, the spread of infectious disease itself. Therefore, we can conduct a variety of different financial tests using this timeline. And also we can see how the government responses in different level of restrictions, regulation, how it will change, how it will affect financial markets. So it's very unique and very interesting case from research perspective. The second unique characteristic of the COVID-19 crisis is the speed of the transmission of the crisis and recovery, which is also very, very unique. So here you can see the results of my academic paper, the COVID-19 Black Swan Crisis, Reaction and Recovery of Various Financial Markets. This paper is available for free to download from the link provided on this slide from SSRN research database. So please feel free to find this paper and download it to see details of the research that I conducted. So as you can see from these graphs, you can see that different asset classes reacted to the COVID-19 shock in terms of the significant losses due to the pandemic, and you can see they showed in the blue color on this slide. For example, platinum, silver, gold, so precious metals, similar patterns identified for stock indices like FTSE 100, Standard & Poor's, and also for more modern in cryptocurrency or digital assets like Litecoin, Ethereum, and Bitcoin. However, after the prices bounced back to pre-COVID levels relatively quickly, so we can see it was very quick reaction of the financial markets, but also quite quick recovery of the prices of those financial assets. It's also very, very interesting and unique characteristics of COVID-19 crisis, because there were not structural problems in the economy, and all this crisis occurred due to the pandemic, due to the disease. So there were no strong financial economic reasons before crisis why financial markets and the economy should collapse, if we compare it to the global financial crisis of 2008. And the third and final unique characteristic of the COVID-19 crisis is the role of the media in transmission and the spread of this crisis. So during the past crisis episode, the social media played a much less important role in forming public opinion, providing pressure on government, and shaping investors' expectations. However, during the COVID-19, media pressure was tremendous. So on this graph, you also can see there is the model that I developed in my second paper that I want you to consider. It's rethinking financial contagion, information transmission mechanism during the COVID-19 pandemic. Again, this paper is available at SSRN database, and it's free to download. Feel free to go to see some of my research results. So what is contagion? Contagion is a phenomenon when the crisis shock transmits from one market to another market, or from one country to another country. So normally we can measure contagion by measuring cross-market correlation during the period of crisis. And related term that you might be aware of, it's called spillover effect, which is also the way how the crisis shock or how the return in volatility in any shocks, any volatility shock transmit or spill over from one market to another market. What other additional financial theories and concepts that help us to understand the COVID-19 crisis better? It's contagion and spillover effect that we just talked about it, heat wave and meteor shower hypothesis, which been developed by Engel, Ito, and Lin in 1990. So heat wave is the situation that's taken basically from astronomical analogy, when there for a few days in certain region very hot weather occurs occasionally and lasts for several days. So similar can happen on the financial markets when the volatility shock that occurred today can continue increasing the volatility on the same market on all subsequent days. Meteor shower hypothesis is also taken from astronomical, so it's a similar analogy. And here the crisis shock occurred on one market will affect other markets, that's situated in different regions, different countries as a meteor shower. Another important terms and theories here, safe haven and safe haven properties of the financial markets and international portfolio diversification. So safe havens are those markets that are relatively immune from the crisis shock. The typical safe haven could be gold. During the crisis, investors flying to safety and trying to allocate their funds to safe and more secure assets like gold. Also, COVID-19 pandemic can be very interesting from the perspective of the impact of oil shocks. And here I recommend you to read the paper that analyzing the impact of oil shock and COVID-19 on the US stock market. And COVID-19 pandemic also very interesting to analyze from behavioral finance viewpoint, specifically for herding behavior. So let me to provide some example regarding the herding behavior from another paper, the effects of a black swan event, COVID-19, on herding behavior in cryptocurrency markets. So we analyzed the herding behavior, so how the investors are mimicking each other, and when markets start moving together during the situation of the crisis, which is behavioral aspects of the financial markets. We analyzed it among 4 measured cryptocurrencies. So there are strong theoretical reasons to observe the black swan effect on cryptocurrency herding, and specifically we would expect that the herding behavior will be amplified during the COVID-19 crisis. However, by our analysis of herding effect in cryptocurrency markets, we haven't found that herding particularly amplified due to the COVID-19 pandemic. And herding in cryptocurrency market remains contingent on up and down market days, which were evident in pre-COVID-19 period as well. So I also recommend you to read this paper to get some additional information about the herding behavior during the COVID-19 pandemic. So what are our main takeaways today? So COVID-19 crisis had diverse and inconsistent impact on financial markets. So different markets reacted to COVID-19 pandemic in different manner. We also learned that there are 3 unique characteristics of the COVID-19 crisis. It's easy to identify main catalyst and timestamp the crisis, the speed of market reaction and recovery, and the role of the media. So these 3 unique characteristics and 3 takeaways that probably you can discuss with your parents, with your friends, And you can use also some main theories and concepts that we learned today, such as contagion, spillover effect, black swan event, portfolio diversification, and herding behavior. So if you have any questions, please do not hesitate to contact me. Specifically, here you can see my email address, my LinkedIn address, Twitter, and ResearchGate, where you can find more information about my research. I really look forward to seeing you all in Southampton Business School. Thank you.